3 stocks that I'm buying in December 2018. You guys ready for this video? Let's go. So welcome back to the channel. Make sure to subscribe down below. But if you're new to this channel, this is a monthly series where I cover 3 stocks that I absolutely love, that I'm absolutely looking to purchase. And this month what we're going to be doing is looking at 3 stocks that I'm personally going to be buying or looking to buy in the month of December. I believe all 3 of these stocks are incredible values. I've alluded to looking into buying some of these in my membership group, so if you're interested, links in the description. But either way, I think without further ado, let's get into it. Let's figure out what these 3 stocks are and why I think these are great buys for December 2018. So let's start off the list here with the largest company in the world, that's Apple. So how can I not talk about Apple? This is a phenomenal company. Ever since they launched their flagship iPhone product, they've been pretty much on top of the world here. And not only that, this is a growth monster stock, even though they're already so large. And in October, they hit a peak of around $233.47 per share. But since then, they've dropped over 25%. So now the question is, does this mean that this is the time to look into Apple for potential long-term investment? Well, let's take a look here at some cold hard facts and numbers, and let's try to figure this out. So let's start off here with their earnings that they just reported in the last few weeks. And we'll see here that EPS came in at $291 versus $278, so a good beat there. Then we had revenue come in at $62.9 billion versus $61.57 billion, good beat there. iPhone sales came in at $46.89 million versus $47.5 million, a slight miss there. And iPhone average selling price, or ASP, came in at $793 versus $750.70 expected, so a good beat there. Guidance for the next quarter is expected between 89 and 93 billion versus 93.02 billion expected, so pretty much in line there as well. So looking at these numbers, kind of thinking about them, analyzing them a little bit, we can see that they had a pretty good quarter overall. EPS had a beat of around 4.7%, guidance had a beat of around 2.2%, but considering how large this company is, even a beat of 1% is impressive in my opinion. Now on the flip side, iPhone sales did have a miss of around 1.3%, but on the flip side of that, you have the average iPhone sale that beat by 5.6%. So what this tells us really in a nutshell is that although iPhone sales are missing analyst expectations, it's been going on for the last few quarters, average selling price on the other hand has been beating analyst expectations. So Apple's pretty smart here, and what they've done is just raise the prices of their iPhones. People still go out there and buy these iPhones even though they're more expensive than they were a few years ago, and as a result, even though they have less volume of sales sold, they have more revenue coming in due to the higher prices. And then of course, looking at the guidance, it came in pretty much in line when looking at the high end of it, so that was pretty good, and that was what investors were expecting. So why was there a huge sell-off in the stock if everything looked fairly good? And why is this a stock that's a good potential buy for December 2018? Well, the biggest news that came out this last earnings report on the conference call was that Apple will no longer be disclosing unit sales numbers for any of their products. This includes iPhones, this includes Macs, includes any products that they sell. They won't be disclosing how many units they've sold of those products every quarter. What they'll do instead, which is what most companies do, is report just the overall EPS, the overall revenue of the company, and of course their guidance for the next quarter. So this of course was taken as a negative in the investing community, spooked a lot of investors, and it made a lot of investors think that there's something that might be happening to Apple in the next few quarters that they want to hide, and as a result, investors started selling out of the stock. So we can see here from this chart that in Q1 2017, iPhone sales seem to have hit a peak and has pretty much flattened growth since then and has not beat that peak ever since. So now by Apple announcement they won't disclose the number of units sold anymore, investors believe that Apple thinks that there will be a big slowdown in their iPhone sales in 2019 and beyond. Now the next quarter is the holiday quarter, which is typically the strongest for Apple, which they will report next quarter calendar year. So it'll be kind of curious to see how the company does overall, because we're not going to see exact iPhone numbers, but I do believe we will see some incredible growth, incredible beats on both the EPS and guidance again. But now let's kind of take a look at the flip side here of this whole, not disclosing the iPhone sales decreasing, all that stuff. In 2015, 2016, 2017, iPhone sales were the main driver and kind of what everyone was looking at to see how Apple was doing. This was also the main reason that a lot of people chose to invest in Apple, because of the success and the amount of revenue and profit they were bringing in from their iPhone sales. But now in 2018 and going into 2019, we see a shift in business, shift in thinking of Apple, and you can see that they're transforming more into a services type company. So as you can see here, services for the past quarter came in just under $10 billion, which was 27% increased year over year, and it makes up over 15% of Apple's overall revenue. Now, in my opinion, by late 2019 going into 2020, I think that this number is actually going to balloon up to at least 20% of their overall revenue, and they're going to have a good chunk of their revenue come in from their services segment. So we can clearly see here a shift in Apple's thinking and Apple's business. Of course, iPhone sales are still extremely important to the success of Apple, but there are other segments that Apple has grown over the last few years to compensate for the slowdown in iPhone sales. On top of this though, the next big catalyst, in my opinion, for iPhones and phones in general will be the rollout of 5G technology. This of course will be the next advancement in cellular technology, 5G, after 4G was released a few years ago. And when this comes out, a lot of new phones will be released to support 5G, and I think that this is actually going to start rolling out in mid to late 2019, going into 2020 to the masses. So what I think will happen is we'll see a lot of customers that have been holding off for say the last 2, 3, 4 years on upgrading their phones finally look to upgrade their iPhones, because now there's actually a compelling reason behind the technology where they can go in and justify spending $1,000+ on an iPhone upgrade. This will be because 5G will support incredible speeds, it'll support incredible technology behind it, and I believe with the marketing from all these carriers that people will be more inclined to go in and place an upgrade order for their iPhone. Now, I also believe that Apple will release a specific 5G iPhone to push this as well, and I think that's going to be a very big iPhone for them. I think that's going to be even bigger than the iPhone 10, and I think it's going to be something unique that they're designing, I'm sure, right now, and it's going to be something completely different from what we've seen before. So this is kind of where my head is at with Apple, and I see this recent weakness as a really good buying opportunity in this stock. So Warren Buffett from Berkshire Hathaway and Apple themselves, who has announced share buybacks, will be buying a lot of Apple, in my opinion, in the next quarter, in the next few quarters, because the stock price is at a very compelling price right now, and a lot of investors are finding value here because think about it, this is where the stock was a year ago, and a lot has changed in their business in the last year, a lot has improved in their business in the last year, so there should be no reason for the stock to decrease in value. In fact, there's a lot of cases where the stock should increase in value. The fundamentals of the business is also very strong. They have a current PE of around 14.5 with a forward PE just under 12. So this stock is really being priced right now as a very safe value stock, and investors aren't really seeing a lot of potential for growth in this company, even though we just saw 20+% growth in their services revenue year over year. And I think that this is just going to continue going in 2019, 2020. And investors will finally come to realize why they should have invested in Apple back in 2017 when it had that huge dip to around $170 per share. And let's not forget the hundreds of billions of dollars Apple has sitting on the sidelines here in cash, so they can always make acquisitions if there is any threat out there or any companies that they can see they can take advantage of purchasing and acquiring and adding another revenue stream into their business. I'm sure Apple will not hesitate to spend that money there. So as we can see, analysts here are also seeing a pretty good upside on Apple stock of over 30% from its current prices, which shows that the overall sentiment is still bullish for the longer term. So if you want to see more details here on what analysts think, make sure to check out TipRanks. I will leave a link in the description down below to Apple and the other two stock picks. So check that out, sign up for free, and you can see kind of an insight of your favorite stocks, the stocks I cover, and see what analysts are thinking, what hedge funds are thinking, and what the overall sentiment is on these stocks. Okay, so now finally to close off with our first stock here, let's take a look at the charts, and we can see that we're sitting at a pretty critical point in the charts right now for Apple. We've been testing support that dates back to around 2016. However, we do have a big gap from around 169 to 173 that I suspect will get filled. Now, if we see the gap fill, I would be much more comfortable adding to this position, as the next leg down from that is around $120 per share, and I don't think we're going to hit that price unless we enter some sort of recession here in the market. And really now we're entering the holiday season here in the back half of 2018. And as spending hits its peak, I think we'll see some strong numbers here in Apple, both in EPS and revenue, like I mentioned before. And as a result, I think the stock price will shoot back up to $200 per share sooner rather than later. So Second Stock Pick is actually a stock where I recently created a video on and I put some compelling reasons in that video as to why I believe this is the stock to look into for 2019. If you haven't watched that video yet, I'll leave a link up here in the card. Make sure to click that and you can watch that video. You can pause this, watch that video, come back to this video after that. And if you're curious what stock this is, if you haven't watched the video yet, it is Disney. And I believe going into 2019 that they do have everything pretty much going for them. So as long as they stay on track, they will do really well in 2019. And I don't think that analysts have priced in the potential that they have in 2019 yet. So in a nutshell, why I'm bullish on Disney is they've pretty much completed their Fox acquisition, just have a few things left before that's completely 100% done. They have some massive blockbuster movies coming out next year, including The Lion King and Aladdin, which I suspect will be massive, massive hits that brings in hundreds of millions of dollars for Disney. And of course, they have their Disney Plus platform, which I think will be a massive success, which they are planning to launch in late 2019. So in the interest of time, if you do want to see more insight into Disney, make sure to check out that video. I do cover things like their last earnings report, where I see the company going, and things that are actually going well for the company right now. So make sure to check out that video. I will leave a link down in the description as well. So moving on, we have our third and final pick for December 2018, and this is a company, this is a stock that I have been waiting on the sidelines for a very long time, and I'm extremely excited to have an opportunity to enter this stock. So this is another blue chip stock, another monster company, one of the largest in the world, and it has been holding up extremely well in the last few months, especially in 2018, where we've been experiencing extreme volatility here in the market that we haven't seen in quite a few years. They are a software and services company that has exposure to massive segments like gaming, PC, and of course cloud. They're only number 2 to AWS in the cloud space, and their product goes by the name Azure. And I think by now it's pretty obvious what this company is, but if you're not sure what it is Microsoft. So Microsoft has really been on fire recently, and I'm not just talking about its stock price, but I'm actually talking about its business fundamentals and its business growth. So they did report earnings in October, so taking a look here at how it did, you see that EPS came in at $1.14 versus 96 cents expected, so 18.75% beat there. And their revenue came in at $29.08 billion versus $27.9 billion, which is a 4.2% beat there. Guidance for the next quarter came in at $31.9 to $32.7 billion versus the $32.25 billion. So we had a good range there and a good beat on the high end for guidance as well. So overall, this is a very, very strong quarter for Microsoft. They beat when a lot of tech companies have been missing on their revenue. Microsoft beat by a pretty good margin, and they suspect the next quarter will also be very strong for them. So looking at the breakdown here of their different segments, you can see that every single one of them had growth in the double digits. So for a company the size of Microsoft, this shows extreme strength in the brand and the services that they offer their customers. And as a long-term investor, this shows a lot of potential in the company for the long term. What I absolutely love about this company specifically is how they've turned a business that was slowly declining, say 4 or 5 years ago, to a company that has been incredibly growing in the last couple of years. Double-digit growth for a company this large is definitely not something you see very often, and it's definitely something that has a lot of people interested in Microsoft. And of course, with all of these incredible results that they've been posting, I believe that their CEO and the management team have their sights set to be number 1 in every segment that they compete in. And that means that services like AWS better keep an eye out for Microsoft because they are coming for the number 1 position. So Microsoft has a pretty large enterprise customer base because of their products like Microsoft Windows, of course, and Skype for Business or Lync. What they're doing, which is pretty smart in my opinion, is going out there, looking for these customers that are on these platforms and migrating these existing customers to the cloud. So this makes it a lot easier for them because they already have their products to these customers and they pitch value to migrate them to the cloud. And of course, as they do that, their Azure business keeps growing and growing and growing. On top of this, they also have another advantage because a lot of competitors out there, like Walmart, for example, that are looking to move to the cloud, they won't be looking at AWS because Amazon is their competitor in the retail space. They wouldn't want to give all that information to their competitor, even though Amazon does, pretty much say that they're not going to be looking into that information or anything like that. It's still something that doesn't really quite sit right with competitors when they're competing head to head. So as a result, Walmart, other companies in this space, other companies that Amazon competes with really look at alternatives, and they always look at the number 2, which is Azure. And I think this is what's going to help propel Azure, you know, right now sitting something like this, going to propel it and pretty much bring it in line with AWS, and eventually, in my opinion, most likely surpass AWS. So pretty much in summary, like I said, 2018 has been a very strong year for them, and I think 2019 will be an even stronger year for them. As you can see here what analysts think, you can see that they have a 20% upside on Microsoft stock, which in my opinion is kind of underestimating the stock. And I think that if the markets find some stability and start to recover, I believe Microsoft will actually be in the mid 100s by the year end 2019 going into 2020. But that of course is kind of just a short-term estimate. Anything can happen in the short term, but over the long term I have no doubt that this will be a company that goes from, say, where it's sitting right now, close to $100 per share to something in the mid hundreds per share. So speaking of the stock, let's take a look at the chart here. Take a look at the technicals. We can see it's a healthy chart for the most part. It did come down to test the 200-day moving average a couple of times, but it's still above it right now. Now, if we do continue to see weakness in the market overall, I don't think that we're going to go much lower than $90 per share in Microsoft specifically. But if we do see strength in the market, like I said, I think this will actually rebound, make new all-time highs, and be one of the stocks leading the market in its rally. So there's just so much going on around Microsoft for Microsoft, and they're currently sitting at a 4 PE of around 20, which is fairly reasonable for a company that's growing so well. But that coupled with the fact that they also pay out a dividend of around 1.75% yield right now makes this a very compelling stock for investors that are looking for value and growth out there in the market. So really in summary, what I would say is I would still thread pretty cautiously going into 2019 with all 3 of these stocks. If I had to pick which company I was most bullish on to least bullish on of these 3, I would say that I'm most bullish on Disney, followed by Apple, followed by Microsoft. And that doesn't mean that I wouldn't want to put my money in all 3 of these companies. But what I would really love to hear is some bearish cases on all 3 of these stocks. I know a lot of you out there refuse to purchase any of these 3 or one of these 3 or 2 of these 3 stocks, and I'd love to hear your opinion on why that is. So if you disagree with me, comment down below, give me your opinion. I will make sure to reply to that comment, and let's have some pretty productive discussions going out there in the comment section. And if you agree with me on the flip side, make sure to drop a huge like, comment down below as well. I'll make sure to reply to you as well. Either way guys, hope you enjoyed this 3 stocks to buy for December 2018 video. Hope you have an awesome rest of the year going into 2019. Hopefully there will be a Santa Claus rally that does happen this year, so you can propel your portfolios higher going into 2019. But either way guys, don't forget to invest positively. I'll see you in the next one. Peace.